Well, hello everybody, welcome back to another Forex market analysis session. My name is Alexander Nikitin. I am a professional trader and a developer of pattern search software. If you guys are new, what we are doing here, we are looking at some good opportunities that may happen next days, as well as I explain some aspects of technical analysis or psychology of trading. So we have a kind of educational resource here. Let us start then. The first, I will analyze my higher time frame to identify what price is doing now and to predict what price is doing next. And then I switch to my trading time frames to find some reasons for entry, to decide how can I get involved and to actually execute the trade. Let us start then. The pair is Australia and Canada. The identification part of my analysis says that we have an uptrend. What is an uptrend? An uptrend is a series of higher highs followed by higher lows. Now look at this movement. We have a low and we have a high. After that, we have a higher low if compared to previous, yes? And then we have a higher high. So we get that series of highs. One of them is higher than another. And we have that series of lows. One of them is higher than another. This is the definition of an uptrend. A series of higher highs and followed by higher lows. Okay, so what it tells me? It tells me that we have a tendency of price to move higher, and the prediction part of my analysis says that the tendency will most likely to continue in its direction rather than to reverse. So if we have a higher probability of price to move higher, the prediction part says buy, only buy. Don't sell, only buy. Well, but where can this movement to the upside start again? It can start here, yes, agree? It can start here, 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 or even here. And it all be inside of those rules of all these movements will fit the rules of an uptrend. Why is this so? To stop an uptrend, we first need a sign of reversal. What is the sign of reversal? If an uptrend is a series of higher highs followed by higher lows, then the lower low will be the sign of reversal. But actually it only stops the uptrend, but it doesn't install a downtrend. What is a downtrend? A downtrend is a series of lower lows followed by lower highs. So until we get this, there won't be any downtrend. So this movement can be a false breakout and an uptrend may resume. That's why I told you that we can have a movement from here deeper, and we can even have a false breakout, a bit more rare situation. Most typically we find some support within this range of previous structure resistance and previous structure support. Actually it is the range of our correction. If you mark it this way, it is the range of our correction. This is the wide buying zone. Somewhere here I am expecting price to start moving to the upside. Well, I have finished my identification part. We have an uptrend, and I have finished my prediction part that the price will most likely to move higher, and somewhere within this rectangle I am expecting it to move it, to start the movement, the actual movement. Okay, now what I'm to do? I need to make this large zone a bit more tight, because it is, how many pips we have here? It is very large. 249 pips. Very large zone. Let's bring it a bit, let's make it a bit smaller. To do that, I will stretch my Fibonacci retracement and I will look at this 61A. It is wonderful level of 61A. In many cases we have the movement starting from this 61A. Okay, if I stretch my fibs to mark the whole uptrend, I will also see this 382 level lining up as well. And if I bring my structure indicator that detects structure for me, it is called fractal zones, it also shows the same level here. Let me stretch it this way. Can you see it? The same level. So we have kind of factors lining up somewhere here. And if you notice the price, you can see 1.0034, 1.0048. So a parity number of 1.00000 is not very far away. So our zone became even more tight, like this, 1.000, something like this. So now it is more comfortable for us to find the opportunities for trading. Okay, let me delete that zones from the chart. Let me stretch that fractal zone as I consider it to be most important. And let's go to our trading time frame. The first trading time frame that I use is 4-hour time frame. Okay, and on this time frame I can see a cipher pattern formation. If you guys don't know what is a cipher pattern, go to my website www.ps-software.net and click Learn the Patterns tab. Okay, what is this cipher? The cipher already completed. You can see price crossed this 1.0091 level and it didn't yet hit stop loss. Well, depending on your rules, if price closes below X, it would be invalid, so no need to enter long. Or if price exceeds X and no need to go long as well, depending on your rule. It's up to you. My rule says that cipher is valid all the way within this zone until it hits stop loss. You can enter anywhere within this zone. I can enter, at least I can enter. It is they are my rules. If you guys want to trade like me, then you are welcome. Backtest my rules, find that they are profitable and trade them. Okay, so I am already in this trade and the price didn't hit the stop loss. What are the take profit levels? Initially they are 382 and 618 from C to D. Yes, C to D. You see 382 and 618. But because price exceeded D and we have it lower now, we need to adjust the targets. We should have adjusted 382 here. Let me put it here. And we should have 618. Sorry, 382 is this one. And we should have the targets being adjusted in this way. This is very important. It is a crucial point in pattern trading. This minor difference is what separates consistently winning pattern traders and consistently losing pattern traders. Not only you have a larger accuracy of those patterns, but it turns everything upside down. I know many traders who claim that advanced patterns don't work, and my only answer to their problems is, guys, you just don't know how to trade them. Because you never did the backtesting, you never saw historically how to trade advanced patterns. So I tell you, trade this way if you want to stay consistently profitable. But before you start trading, you need to do the backtesting. Don't rely on my words. Who knows, maybe I'm lying to you. Okay, this is the target number 1 and target number 2. I typically place 2 orders. One of them has take profit 1 and another has take profit 2, and both of them have stop loss of this. Okay, let me then switch to intraday time frame. This was a swing trading opportunity. Let me switch to intraday trading opportunity for those of you guys who trade intraday. And we have a setup as well. Also bullish. Going to the upside. X to A to B, B to C. A bullish butterfly formation. If you guys trade butterflies, you are welcome on board. It just completed at market butterfly. Stop loss is 1.0009 and take profit is 1.0044 and 1.0055. These are initial stops and take profits. Let me stretch the fibs if we need to do the target adjustment already. Yes, we need to do it to do the target adjustments. So need to place them a bit lower this way. Okay, we have target adjustments. The first take profit is 1.0043 and the second take profit is 1.0055. Well guys, that's it about opportunities. One of them is intraday trading opportunity, a smaller butterfly formation, and another is larger cipher pattern on 4-hour time frame, swing trading opportunity. Well, if you like this video, hope you click that like button, share this video on social media, subscribe for my further episodes, and I see you then.